So you might be wondering, how much does a single tweet actually cost? Well, for most of us, it's absolutely free. But in the high-stakes world of finance, a carefully crafted 280-character post can be worth millions. Today, we're looking at a case that completely rocked Wall Street. We're going to see exactly how social media was weaponized to manipulate stock prices and how one man deceived everyday private investors to line his own pockets.
Let's dive right into the anatomy of a market manipulator.
Section 1. Anatomy of a schemer.
For years, if you turned on CNBC, Fox Business, or Bloomberg TV, you probably saw Andrew Left. He was this trusted, go-to financial voice. But as you'll see from the official U.S. District Court indictment right here, the reality was a whole different story. After a massive federal investigation, it turns out Left wasn't some crusading short seller exposing corporate fraud. Actually, scratch that. He was orchestrating a systematic fraud of his own, which ultimately led to a $21 million securities fraud conviction.
Section 2. The Bait and Switch Scheme.
Okay, so how exactly did he manipulate these stock prices? The predatory precision of his formula is just wild. Let's break it down. Step 1. Right before publishing anything, Left secretly bought massive positions in a target stock using cheap, short-dated options. Basically, these are highly risky bets that only pay out if a stock's price moves drastically and immediately, usually within like 0 to 5 days. Step 2. He'd post a sensational tweet to trigger instant market panic. And step 3. As soon as the price moved, he would immediately dump the stock to capture those profits. Classic bait and switch.
Section 3. Social networks as weapons.
Left understood modern market mechanics perfectly. He didn't just use social media to share opinions, he weaponized it. He used specific, extreme language designed to trigger automated news-based trading algorithms. Just look at this tweet from December 2018. Minutes after buying short-dated put options on Twitter, he posted that the platform had become, quote, the Harvey Weinstein of social media with a price target of $20. I mean, wow. He explicitly designed that comparison to incite a massive immediate sell-off.
And you know what? It worked flawlessly. As the market completely panicked and the stock dropped to around 28 bucks, Left quietly closed all of his short positions. He never even waited for the stock to hit his publicized $20 target. He pocketed a staggering $2 million in profit in a single day. $2 million.
But he didn't just attack companies to drive prices down. No, he also ran the scheme in reverse, pumping stocks to artificially inflate their valuations. He blasted out tweets saying things like, Citron is long Tesla, or Citron buys Nvidia. Or for Facebook, he literally tweeted, backing up the sleigh. He issued these massive, aggressive price targets for one simple reason, to lure unsuspecting retail buyers into driving the price up.
The blatant hypocrisy here is incredible when you contrast his trades side by side. Take Nvidia, for example. He publicly tweeted a target price of $165, basically telling his followers it was finally a buy and was going to soar. But in private, within just 2 hours of sending that tweet, while the stock was barely hovering around $150, he quietly dumped 100% of his pre-tweet position. He walked away with over $930,000. He was literally using his own followers as exit liquidity.
Section 4. The blow to private investors.
The blistering speed of this deception is terrifying when you map it out minute by minute. Just look at this timeline for Roku. At 9:40 a.m., Left finishes opening his short positions. At 9:41 a.m., he fires off a tweet declaring Roku is, quote, uninvestable, which tanks the stock instantly. By 9:43 a.m., literally 2 minutes later, he places limit orders to exit. For those who don't know, a limit order just means he set his account to automatically sell the second it hit his desired profit. He was in and out with his cash before the public even finished reading the tweet.
So how did he actually feel about the everyday private investors he was scamming? Well, when the DOJ recovered his private encrypted messages, they found a text he sent to a hedge fund manager after manipulating a cannabis stock heavily owned by retail traders. He actually bragged that his trades were, quote, like taking candy from a baby. It's genuinely hard to believe the sheer contempt he had for the everyday people who were blindly following his advice. But hiding a $21 million fraud requires a pretty elaborate cover-up. Left constantly touted the independence of his platform, Citron Research. In reality, the whole thing was a web of lies. He fabricated fake investor letters to make it look like he managed a successful hedge fund, when Citron Capital only traded his own personal money. He swore up and down he never coordinated with hedge funds, yet prosecutors proved he tipped them off in advance of his tweets so they could trade ahead of the public. They even kicked back profits to him using phony invoices disguised as consulting services.
And when the SEC finally came knocking, he just deleted his encrypted messages.
He even lied directly to the mainstream media to cover his tracks. During a manipulation of Beyond Meat stock, CNBC reached out to ask about his position. He told them, "Yes, I shorted some today," claiming the stock was just retail-driven hype without any fundamental basis. But that was a massive live omission. By the time he gave that statement to CNBC, he had already secretly closed 98% of his short position, less than 15 minutes after triggering the initial panic.
Section 5. Endgame and the verdict.
The evidence presented by the government was just absolutely overwhelming. A federal jury found Andrew Left guilty of securities fraud and market manipulation. What you should take away from this explainer isn't about whether his opinions on these companies were fundamentally right or wrong. It's the fact that he deliberately and systematically scammed millions of dollars by hiding his true trading intentions from the public, completely destroying the transparency that fair markets rely on.
Which leaves us with a deeply unsettling question to consider. Andrew Left wasn't some fringe blogger in a basement. He was a highly respected analyst who appeared on major financial television networks for years. He was celebrated for his insights, all while secretly using those platforms to bet directly against the private investors who trusted him. So, if the so-called experts on TV are actively weaponizing their influence to take your money, who can you really trust with your investments?